So Warren Buffett said that he spends more time looking at and reading balance sheets than he does income statements. Now, why is this? Because income statements are easy to dress up by cooking the books, manipulating the numbers. But when it comes to a balance sheet, you can't really do that. They show you what's happening behind the scenes, the real genuine numbers of a company, what they own, and all of their loans and liabilities. So not too long ago, my wife and I, we went back to the States, quick little vacation to see some friends and family, to tell them about the exciting news about how the Chase family is about to get a little bigger. But anyways, we went to a few different cities all across the US. When we were in New York City, I actually met a family friend of the Chagee enterprise, which is a boba tea chain and franchise all across China, Asia, and a little bit, they're spreading to other parts of the world, but it's still a very hyper growth beverage company. So think of it as like the Starbucks of the Far East. And if you know anything about the Asian culture, a boba tea, dude, it is like the thing that is hot right now that you drink when you hang out with people or after you finish your meal. It's like the go-to drink. Not so much with the alcoholic beverages, but it's boba tea. But anyways, this individual informed me that the Chagee enterprise is contemplating on opening up a branch in the East Coast. So in today's video, we're going to be doing a working example of what's truly important when it comes to a balance sheet with Chagee. So what exactly is the balance sheet? It's one of three of the financial statements that we look at and assess to figure out if we have a dividend compounder with cheese in our hands or not. And it's the preferred numbers and data that accountants like to look at the balance sheet. But also Warren Buffett. He said this, "It's one thing we've never really talked about here, but I spend more time looking at balance sheets than I do income statements. Wall Street does not pay much attention to balance sheets, but I like to look at balance sheets over an 8 or 10-year period before I even look at the income statement, because there are certain things that are just harder to hide or play games with on the balance sheet than with the income statement. Neither one gives you the total answer on anything, but you should understand what the figures are saying and what they don't say, and what they can't say, and what the management would like them to say that the auditors wouldn't like them to say. You learn more from balance sheets, in my view, than what most people give them credit for." So as you're watching this video, you can go ahead and pull up your favorite website to look at stock numbers and data. It could be Yahoo Finance, Seeking Alpha, or in this case, Stock Analysis. Doesn't matter. They all show you and portray the exact same numbers because it has to be publicly posted by a publicly traded company. So right now we're looking at Chagee Holdings, ticker symbol CHA. They just debuted in the US stock market. They're currently trading for about $5.1 billion. And at first glance, you might be like, dude, that's way too overvalued for a drink beverage company that I have never heard of. Wait until we take a look at their balance sheet, okay? And I'm gonna just tell you this right now. As we take a look at their balance sheet, these are the three financial statements, this is gonna feel intimidating. And it's completely okay to feel that way because I spent a couple of years learning about this stuff during my MBA. All that to say, it takes time and practice, and eventually you will be good at it as well, and it won't be too scary to look at. So, as we take a look at their balance sheet, there's so many different things to look at, right? All of these different line items, they're important. Okay, but depending on who you are, you prioritize and you care about certain line items more than other people. When it comes to me, there's two that I truly care about. They're all important. I'm not dismissing anything here, okay? But the two that I care most about is their cash situation, but also their debt situation. Because how I see it is this: if a company has an adequate supply of cash in their wallets, then they have flexibility on what they want to do. Do they want to increase their dividend payouts? Do they want to acquire another company? And it just lowers their financial risk. Right? Even when you break it down to a personal level, if you're drowning in debt and you don't have much cash, it's not a good position to be in. Which takes me to point number 2. I look at their debt situation to see, it doesn't scare me to have a company post billions of dollars of debt if I know that it is manageable and that it serves a purpose in growing the company, okay? Some people, they see debt and they automatically are allergic and they start sneezing and talking trash about a company, but if you understand how to make money from debt, all that to say, a business being leveraged is not a bad thing if you know how to utilize it, all right? But on the other side of the argument, if a company is drowning in debt and then it's not manageable, then you know that their financial health is not optimal. Okay, I'm talking too much. Let's go ahead and look at some of these numbers. Because they just became publicly traded, now we have information going back the past 3 years, from fiscal year 2022 all the way to the trailing 12 months. That's what TTM means. And as I scroll up here, this is not going to be in US dollars, it's in Chinese yuan. So in their currency, okay? So if I say $5.1 billion, I'm basically saying that in the equivalence of the Chinese currency, okay? So what we're looking at here right now, and by the way, when you look at a balance sheet, the reason why it's called balance is that whatever assets they have is balanced and is equivalent to their liabilities and the shareholders' equity. So you take those two variables, it equals the exact same amount as the assets. It's pretty cool. You would think a guy like me would not like accounting, but when I did my MBA, dude, that was probably one of my favorite classes to take. Just learning about the numbers and data. I mean, does it come as a surprise that I'm passionate about this stuff? I love what I do, these videos that I make. But anyways, getting back on topic, please don't get ADD here. So taking a look at their books, right? When we take a look at this line item right here, cash and cash equivalents, you can think of it as how much cash that they have in their wallets, but also the money that they have invested into a money market fund or treasury bonds and notes that they can sell and liquidate in less than like 2 weeks and get that into cash. So how much cash do they have? And what we want to see is a trend that is growing or at least stabilized. For a mature company, stabilized. For a hyper growth company, you do want to see them flush with cash. Because what I have seen is that when a hyper growth company, the reason why they usually go bankrupt and delisted from the stock market is because they run out of cash. That's why a hyper growth company like Chagee, we need to see the amount of excess cash in the reserves and in the vault to be growing at a very aggressive rate. And that's essentially what we're seeing. It's going from $200 million, remember this is in Chinese yuan, so converted, to $2.4 billion. That's insane. That's a growth of 1,000% of how much cash they have left over on the books. That's pretty wild. And just as an FYI, the reason why we're doing a working example is I am thinking about investing into them. So this is step one. I'm going to be looking at the balance sheet, and then after that, I'm going to be looking at their other financial metrics, ratios, and see where they are to see if it's a good investment or not. But so far, this is really good. As you can see, year over year, from 2023 to 2024, it went up by 100%. And then if we fast forward to where we are today, the trailing 12 months, they have $5.3 billion of cash on hand. As an example, if I pull up another hyper growth company, I don't know, like BarkBox, right? They send you every single month dog toys or treats to your house. It's a subscription box business model. If we take a look at their balance sheet and take a look at their cash situation, this is exactly what we do not want to see. It is very inconsistent, and actually for the past 3 years, it's just going down from their pandemic highs of having about $200 million of cash on hand. They're burning through cash right now, and for me, this would be a huge red flag. But going back to the working example with Chagee, so that's step one. I really like that. The next thing that I like to do is assess their cash that they have in their pockets and in their wallets to how much debt that they have. And that's called the net cash ratio. And you don't even need to plug and chug anything. It's here already. So as you scroll down, this is the total assets. Their company right now has $7.2 billion of total assets. And if I scroll down further, you'll see their total liabilities is 3.7, and then their shareholders' equity is 3.4. If you add it up, it's going to be exactly $7.2 billion. It's pretty cool. Accounting, once you get to know how to do it or know what to look for, I think it's pretty exciting stuff. But anyways, as we scroll down to assess their debt and loan situation, right there, their total debt. This includes the short term and long term. So short term is usually like 1, 2 to 3 year debt obligations, and long term is usually like 5, 10, 20, 30 year contractual obligations. So $788 million in debt. And what I want to call out is that this is not a bad thing. As you can see, their total debt year over year is growing at a very aggressive rate. And for some people, this might scare them away because they don't understand that debt is not an evil thing as long as it's manageable. How do we know if it's manageable or not? Well, as we scroll down right here and take a look at their net cash situation, after paying off all of the loans that are on their books, $788 million, this is how much cash they have left over. This is the net cash position. So they have $4.5 billion of cash left over after accounting for all the loans on the books. So when I think about their cash situation for a hyper-growth boba tea company, I am very fascinated right now. And one reason why I really like investing into restaurants and businesses that operate in the food and drink space is that their business model is really easy to understand. And the second reason why I'm drawn and attracted to the restaurant and beverage industry is that it's a type of business, service, or product that will always be in demand. No matter how advanced we become as a civilization or AI taking over everybody's jobs, we're still gonna have to eat and drink, right? So when I think about the restaurant industry, I like investing into the top dogs. Talking about Domino's, McDonald's, Texas Roadhouse, I like them. Anyways, I don't want to go on that tangent and rant. So next thing we're going to be looking at is their debt situation. And there's many different ways to do it. Okay, some people can argue this way is the best way. Other people are like, dude, my right nipple is lactating. That's gross. I don't want to know that. For me, the way that I like to assess whether or not the debt is manageable, I'm not saying is it big or not, because when I look at $788 million of debt to their market cap of like $5 billion, that's a lot. But what I'm saying, the key word is manageable. So how I do it is the debt to EBITDA ratio. Essentially, it assesses how many years it would take for the company to pay off its total debt using its core operating profits, the EBITDA, if nothing else changes. So if the debt to EBITDA ratio is like a 3, it would take this company 3 years to pay off all of the loans on the books. And to figure that out, it's gonna be really simple. We're going to plug their total debt right here, $788 million converted to the Chinese yuan. Please don't be that wise guy that's like, hey, excuse me, this is a yuan. I get it. Just do the conversions, please. And what we're gonna do is we're gonna jump over to the income statement, another financial statement that's really important, and you're gonna plug in their EBITDA right there. So 3 billion. Oh my goodness. This is a really solid company based off of like initial impressions. But we're going to do that. And the ratio is 0.25. So in the span of 3 months, this company can pay off all of their freaking loans, debt, any obligations that they have to other people, which tells me that the loans that they have on their books, you might be like, dude, this is so big, 788, and how it's growing at a very aggressive trend and be scared. But what I see is that their debt, dude, they have the power to take out even more loans in order to hyperscale and open up more franchises, especially here in the US, right? I think there's only one in Los Angeles. From what I see, their financial health of the company and how successful they are, I'm going to stop myself before I get too carried away. I think based off of their balance sheet, I know there's only 2.5 things that we looked at. For a hyper-growth company, this is really freaking impressive. However, I do want to make a point by saying this. We can't, as investors, just look at the balance sheet, because that's what happened in the past. These are the numbers that are recorded on their books in an accounting fashion and manner. And that's why I think it's also very important that you look to the future and to the present tense to figure out what is going on and what is their earnings growth, right? So I think the income statement is also very, very freaking important. Because think about it like this, okay? The income statement, right? It consists of like the revenue, the top line, the bottom line, the net income. So it's like in an academic setting, it's your report card for the last semester or quarter in your school. Okay? You get A's, B's, C's. It shows you what you're achieving in the now. The balance sheet is kind of like your overall GPA for the duration of your college, university, high school, whatever it is, right? Your entire academic career. It's what they achieved in the past. And the reason why I'm emphasizing this point is if you only look at the past and the total returns and just the balance sheet, then it's kind of like driving a car by only looking at the rear view mirror, what happened in the past. And that's why when some people tell me only the total return matters, it's like, dude, first of all, sit down, your breath smells, you gotta brush that teeth. Total returns is what happened in the past. That's not the best and the most optimized metric. That's what they achieved 10 years ago, 20 years ago, up until now. What are they going to achieve in the future? 5 years, 10 years? That's why it's a balancing act, dude. You got to take a look at and consider all the different financial statements and a handful metrics and ratios. That way you can kind of balance your worldview of a company to be like, okay, in the past, they look pretty good. Their future looks pretty good as well. That way you can reduce the doubts and the uncertainty that you have about a company like, oh my gosh, I'm about to invest 10 grand into them. Will it go up? Instead, you'll be confident like, oh my gosh, I know what they're achieving and I know what their past looks like, their DNA and their timeline and their history. And that's how a conviction for a company is built on a firm pillar. If you just look at a stock price chart and you say to yourself, oh my gosh, they used to be $100, now they're down to $20, I should invest into them. Dude, that is gambling. That's like walking into a casino, pulling down your pants and pissing all over the carpet and just going on the slot machine all night. You have to understand, why are they going on a sell-off? Why is it $20 now? Will they actually rebound? All that to say, it's important to balance what happened in the past, but you should also keep your eyes forward on the road, right? When you drive, I feel like it's Pareto's principle, right? 80% of the time you should be looking forward and 20% of the time you should be looking in the rear view mirror. Because as you look ahead, you'll take into consideration the forward guidance from the leadership and the outlook of the company, their growth projections, like is their revenue growing by 8% or did it go down by 6%? That is also important, just like the past, okay? So don't let anyone convince you that total return is the only thing that matters. That's what a company achieved in the past. That's not cognizant and a predictor of what's going to happen in the future. If you don't get it by now, you can tell that I'm very passionate about the financial statements and how to know whether or not a company is good objectively. There are companies that we can just say on a rhetoric level, like, I feel like it's a good company, but if you lift open the hood and look at the engine, is it actually a good company or not? So if you guys want me to make a deep dive, detailed video for each one of the financial statements, let me know. If there's no interest, I'll move on to the other videos that are on the back burner. But if you want me to, I can literally spend 30 minutes to maybe an hour just going over line by line of what's truly important in the income statement. And the exact same thing for the balance sheet, and of course for the cash flow statement as well. Other than that, before I close out the video, just giving you guys some life updates. So these days, for the past 3 weeks now, I've been running. Okay? Running with an objective in mind. I've been a serial procrastinator. I've been saying that I'm going to run a marathon for almost 20 years. And have I participated in a marathon? No, I have not. Every single year, I come up with an excuse and I don't do it. So I'm finally trying to be a man of my word, especially before the baby comes. I want to run a marathon. Okay, so I've been dialed in, and whenever I have free time, instead of just like relaxing and taking a deep breath, I go out for a run. And one thing that I noticed is I've been pretty darn stressed for the past few days due to an emergency. And I'm going to tell you this right now, running, dude, I don't smoke. Right? I understand why people smoke. I've heard that it's a method of releasing stress, but dude, I'm telling you right now, running, once you get past like that 20, 30-minute mark and the runner's high just smacks you right across the face, dude, it hits differently. So one thing that I noticed is usually when I'm stressed out, I start losing hair and I start thinking negatively and I get cynical. But running has really helped me to regulate my emotions and especially my mood. Because going forward, like an income statement, I'm supposed to be the father and the husband and the protector of the family. So I have to really learn how to manage my own stress. That way, if someone in my family is going through a hardship or a stressful time, I can be the calm in the storm. I can be the anchor, the rock to help them and guide them. Because I don't think it'll be productive or good of me if they're panicking or stressed and I, alongside with them, having an anger fit or I'm being super frustrated and cussing. I feel like that's not going to help. So I'm trying to learn how to be a reliable provider that's also dependable. So running has been a game changer. I did have it on my agenda that once I got back from the US, I was finally gonna start buying up some Warhammer stuff and getting into it, but yeah, I guess that's on the back burner for now. Running has been my hobby as of late. One final thing. So we're running a Patreon campaign right now. Once we hit 15, I'm going to buzz my hair, right? I'm going to get rid of all of this beautiful ass hair. No, it's not a wig. I will be getting rid of it. Right now we're at 12. That's really freaking exciting. The fact that there's 12 people out here that are willing to believe in me and support me, like, dude, that's phenomenal. So just 3 more to go. Pretty stoked on that end. And yeah, I love you guys. Stay safe. Good luck in the stock market, and I will talk to you next time.